Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy. As you know from my previous videos, on Mondays, Wednesdays, and Fridays, the market generally tends to favor the upside. So here's Monday, June 16th, and the market opened up right at the top of the calculated trading zone and moved up throughout the day. And so no surprise. Now, should you trade if you're using the Taylor calculator? Now, of course, Mondays, as I said, favor the upside, but the calculator forecasts prices down at support at 59.59 and resistance at 60.19. And so if we're using an indicator that's going to help us determine where the prices are likely to trade, and we don't know where prices are actually going to trade, but they trade above the trading zone, away from the trading zone, fade the trading zone, why would you want to trade it if you're using this indicator? Now, maybe you're using an indicator that shows prices are going to increase or improve, or maybe you know that Mondays favor market prices increasing, but still in all, if you're using the trading zone, which is particularly accurate, why would you want to risk trading when prices are not trading within the forecast trading range? So I suggest that you leave Monday alone if you're trading the trading zone. Now let's move on to Tuesday, June 17th. Now June 17th, and as I've said in my previous videos, wait for about an hour after the market opens to make a trade, because if you do so, you'll see which way the market wants to go. Now, if you also know that there are only 6 trade setups, one of which being support and resistance, you can look at this chart, and even at the 11 o'clock mark, we can see that prices opened up at the bottom of the trading zone and be great. Prices could traverse the trading zone, trade to the top. But as the prices moved, we can see that prices are forming a resistance at around 60.25. So that was reached at 10:18. It was reached at 11:09. And if you stayed with it, you can see that prices are also finding a top at around the same price, 60.25. So where are prices going to go? Prices are hitting their head at 60.25 throughout the morning session. So where are prices going to likely trade? Well, they're certainly not going to trade up. So we can take our trading zone, clone it, move it down, and see where prices are going to go. And so we move the clone down, move it to the intraday high, which was right about here. And as we can see, prices were putting in a high at 60.25, resistance at 60.25. And so we clone our trading zone. Here's where prices were going to trade. And so we take the trade. Prices move down to 50.80 or thereabouts. And that was it for the day. Now, I'm going to remove that. Now, I want to point out something today being June 17th. Now, June 17th, CME contracts roll over. That means that the June contract rolls to the September contract. The June contract is ESM, September contract is ESU. And the transition, I use the ES1 contract because that's the continuous contract. Prior to today, June 17th, the continuous contract, which is now tracking at 60.20, was tracking the same price as ESM. And now notice it's tracking 60.20, the same price as ESU. So that is the indication that prices rolled over. We're going to start trading the ESU contract, the September contract. And that's all I can say about that. If you need to get some information about what these contracts are, these rollovers, these quarterly rollovers, you can contact me, Marv Eisen at timelessdollar.com. Be happy to go over it with you. Okay, so where are prices going to trade tomorrow? Well, tomorrow is Wednesday, June 18th, and I want to point out something on the economic calendar. Wednesday, June 18th, my goodness, 2 p.m. FOMC interest rate decision. Now, if you're trading E-minis, FOMC is going to move the market. And whether or not you believe interest rates are going to be steady, they're going to be raised, they're going to be lowered. I suggest that prior to the interest rate decision, don't trade. The market is going to trade in a narrow range in the morning. This is the way it always goes on FOMC days. And just before the FOMC announcement, the market gyrates wildly, whipsaws. You can make a lot of money quickly. You can lose a lot of money quickly. And as I've always told my students, the way to make money, the number one thing to know about making money is reduce risk as much as possible. So if you're going to be trading on a day where market is going to whipsaw, and you know it's going to whipsaw, why introduce risk in your trading? So don't do it. Don't do it. Okay. So that's my video for today, Marv Eisen for Timeless Dollar Trading Academy. And I just want to point out here on Tuesday, June 17th, in preparation for the FOMC day. And so the market put in a resistance top at 60.25. And you had to really use patience for this because I tell my viewers, if you're going to be trading, wait for an hour after the market opens, particularly with volatile days. Wait for an hour to see which way the market is going to break. And as we can see at 10:30, which is right about over here, which way did the market break? It didn't take out the bottom, which was put in at about 9:48. Didn't take that out. Did it take out the previous high at 10:15? Not really. And so it did go up, did briefly take out the high, but quickly retreated. And so don't be so sure. And so maybe wait a little longer. And this is where I always say, use lots of patience, because if you're going to be trading and you waited and waited and waited till 12 o'clock, you would see this top forming. And you can figure, well, the market has hit a top. It's not looking to go higher. And so maybe I should transpose the trading zone. And so I transpose the trading zone, take a trade, clone it, transpose the clone to the intraday high right about there. And where should I take a trade? Well, somewhere over here. I'd feel sort of confident after 12:30 or thereabouts, and ride the market down to the forecast low at 59.80, 59.83. So that's my video for today. You got to be smart. You got to use patience, and you've got to use the calculated trading zone, because that's where the prices are likely to trade. And if they don't trade where they're likely to trade, why trade that day? Wait. Pick a day where the market is going to trade within the calculated numbers, because it almost always does. And so, thanks so much for watching. Use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading.